you must be having a bank account. I'm sure we all have bank accounts. You must be using one or the other car. You must be, wearing one of the watch. Now, every time you go and take some decision where to open your bank account, which car to buy, which watch to buy, which laptop to buy, which mobile to buy, you make a buyer decision, and someone is giving you that product and services. Well, as I said or keep saying this, that investing into stock market is all about investing into different businesses. Well, when you go and take decision on which bank to go to open your account, that point of time you must be comparing other banks as well, and then you are freezing upon one bank. Now that decision making happens through one or the other process. Sometimes you work in a company and that company got a tie-up with that specific bank, and then they open your salary account there, and then you continue, right? Sometimes you get influenced by advertisement of one bank and you go there and you probably open your account. Another people, maybe your spouse has bank account and then now you are also opening your bank account there, right? So the idea here is every company or every business, they all can be grouped together. So all the banks can be grouped together and can be called an industry, banking industry, right? So as a buyer of product and services, you take decisions, and similarly you have to take decision as an investor also, that in which bank you have to invest, in which automobile company you have to invest. Not only this, in how many sectors you have to invest. There are so many sectors and industry. Well, this class is dedicated on just having some information on what are the different kind of sectors or industry available present in this country, and that's it. Then we will also see that out of those sectors which our market consider important, and then in later chapter we will learn about industry analysis or sectorial analysis. It is also important to know this point that as an investment approach, we always have two kind of approach. One is called a top to bottom approach and another is bottom up approach, right? And in this approach, sectorial analysis play a very important role. So let's see what are the different sectors and what I'm talking about this approach, and we will jump to one of the PPT I have prepared. So this is module 2 of class 15, where we will be knowing about different sectors and industries. As I was telling you that investing and sectorial analysis is having a very important correlation with each other, the investing and sectorial analysis, because of multiple reasons. One is like one of the approach truly belongs from sectorial analysis, and the another reason is you need to do it to diversify your investment. You cannot be invested into just one sector or one company, right? The basic of the portfolio management is you have to be diversified. That's how you will be managing the risk. One of the risk which is called the industry or the sector risk as well, right? So let me first tell you about the two investing approach I was talking about. So one is called top down approach or sector rotation approach of investing. Another is called bottom up approach of investing, right? So in the very first you saw that there are people who believe that not all the sectors will do good at a time, and it is true also. At certain point of time, the economy is into one situation when it will be better that you stay invested into certain sectors and ignore others. I mean, this kind of scenarios come, and as a sector analysis you will be doing it. When you know how to do the sector analysis, you will come to know about this. But yes, one of the important approach of investing is you take top down approach, where in the top down approach the most promising sectors are identified first, and then the investors review stocks within that sector to determine which one will automatically or ultimately be purchased. In the bottom up approach of investing, this focuses on how an individual company in a sector performs compared to specific companies within the sectors, right? So the idea is like this. You will come to know now that there are many sectors, right? You cannot be invested into all the sectors, all 20-25 sectors. So what you will do, you will do a sector analysis and then freeze 6 to 7 sectors to invest into, and then you will find companies within those sectors, right? The another approach is where you go and directly jump to the company and try to see that how good that company is, and then you look at the sector analysis at the later stage. And this is again one approach it could be. So there could be one company which is not belonging from the top performing sector as per your analysis, but still it can be fundamentally very good, or it is driving a really great value at that market price, right? So investing is all about, you may find many great companies to invest, right? But then what you need to also see that whether that stock price actually justify the investing at this current level. So this is called the valuation part. However, there are people who belong from the other world also, as I have told you in the previous class, that you first look at the business model, you look at the company, and irrespective of what the share price is, you go and take it because you have a firm belief that this is going to be one of the multi-bagger. There is no debate here that which is the good approach or the bad approach, but something which I would like to advocate here, especially for the retail investor, that it is really great to do a basic sector analysis, stay aligned with the economy. So in economy, there will be sectors which will be given more importance. Accordingly, if you know that which sector has been given more importance, you'll probably try to make your portfolio also along with the economy performance only. Not only this, when you are going to do the risk management and you know that I'm going to hedge my market risk by shorting Nifty future, and if you don't know that out of all the Nifty 50 stocks, 39% weightage is given to the BFSI, you will be not able to basically have a very strong correlation between your portfolio and the hedging instrument. So it is very important that you know these basic concepts. These are not concepts, I would say, this is more like an information which I'm going to share into this class. So there is no concept learning as per se, according to me. It is more like there are information, these are the public information, you can also find on internet, and I'm also explaining you the same information which is there on the internet, which is there on the NSE website, and then probably you are becoming more aware about the sector part. And understanding is like, yes, you need to know the sectors, you need how many sectors are there into your country, because you are investing into your country, your own economy, and after that you have to identify sectors, and once you have identified sector, you will go and start choosing the best company as per those sectors. In later chapters, we will learn categorically on how to go do analysis on a certain sectors. It may not be possible to cover all the 25 sectors, but certainly 4-5 big sectors will be taken into the consideration, that how to basically judge those sectors, what are the key parameters which you have to look into those companies who are belonging from that specific sector. So as I was telling you about, there are public information, it is there on the website. So why not we go and see NSE website and also see the sectorial indexes first. So I'll go open NSE equity. So you can see Nifty 50 is the base index, and you can go and jump to sectorial indices. Now sectorial indices are Nifty Auto. It will have what? It will have all the auto companies, right? So they all belong to one sector called auto sector. Then you have banks, Nifty banks. There will be some learning out of this website also here for us, which information I'll be sharing with you. Then you have Nifty energy sector. So Tata Power, GAIL, NTPC, IOC, ONGC. So see, something you can see here is Tata Power and IOC nature of businesses will be not exactly the same, right? But they all belong from same sector. There where the difference of industry and sector come. There is a very minute difference which we will learn in today's class also. But you can see that there is energy sector, you have financial services sector. Now in financial services sector, Kotak Bank and PFC, they are not exactly like the same nature of businesses they have. Bajaj Finance and Kotak Bank may not have a very similar kind of businesses. Like if I have to say Kotak Bank and ICICI Bank, yes, they are more or less into the same kind of services. But we cannot say that Kotak Bank and REC Limited or PFC are into the same businesses, right? So, but they belong from the same sectors, and that's why they have been put together under the sectorial indices, right? Now, others, FMCG sector you can see, you can also see IT sector, then these are the companies in the IT sector. Then you have media, within media you can see Sun TV, Dish TV, G Media, TV Today, so many companies are there into media also. Nifty Metal is there, right? So you can go and see that there are 12 sectorial indices which has been also created. Something really interesting which I saw here is they have created two indices for Nifty PSU Bank and Nifty Private Bank, right? They already have a bank Nifty. Nifty Bank is one banking sector indices which they have created, and out of that they have also created two different indices. One is Nifty PSU and another is Nifty Private Bank. You know what is the reason? Because the correlation between two companies in the same industry is very, very high. I mean, if one company is doing well, probably there is a very high chance that the other company will also do well, the competitor and the second liner, or even the follow through companies. But here, the way businesses have been managed in PSU Bank and private sector banks from last 7-8 years or even 10 years, what I have seen that they hardly have any correlation. On one side, private bank have been doing really well, and on the other side, PSU Bank have been struggling through different crises and scenarios, which we will learn in sectorial analysis of the banking sector. But yes, this is a very interesting thing that even NSE recognized that they cannot put them together. They have put them together into Nifty Bank, but then if you categorically want to see which sector is doing really well out of the banking, then they have put together PSU together, SBI, PNB and other banks, and then they have put all the private banks together, right? So this is an interesting find which I have observed right now, in fact, when I'm taking this class, and I see a very valid reason behind it, right? So similarly, you will also find a lot of observation where you will come to know that knowing about this information is very critical when you are going to take investing decisions, right? Now, as I was explaining you about so this is something which we have covered, like why we have top-down approach and the significance of sector analysis, and then the bottom-up approach where you go and basically look at the company first and not the sector, and since you are very much interested into that company, you do an independent analysis on that company, right? But as I was also explaining you that there is a difference between sector and industry, though both of them are often used interchangeably, but they operate into the same segment of the economy, similar nature of businesses more or less also, but there is some difference, and the difference is sector is a broad term, but industry refers to a specific grouping of companies, right? So for example, financial services is an industry, banking is an industry, insurance is an industry, stock broking as an industry. When you go and open your account with one of the stock brokers, they belong from a different industry altogether. Their nature of business, their revenue, their entry barrier, their competition, their clientele all comes together. But when we have to go and put them all together, we can tell them that they all belong to BFSI sector. So economy is the probably the biggest term, or on the top of the umbrella. Then you have sectors, and within sectors you have different industries. This is something which you probably need to know as well. That's why I have taken this into consideration. Then as per the pure economist, they also have a different definition about the sectors, and they have differentiated these as primary, secondary, tertiary, and quaternary sectors. And according to them, the agriculture and mining, which are the very basic things, like the raw, so you go and basically harvesting produce are there, or you mine stuff, they put them all together into primary sectors. And when you use them, those natural resources or the byproduct of those natural resources, and you come into manufacturing or construction sector, they put them into secondary sector. Retailers, entertainment, financial companies, they put them into tertiary sector at third level. And at the last level, these are more like intellectual services, which hypothetically or tangible value, you won't be able to see the tangible value of it probably, but they have a very important role into both the development of economy or any specific sectors. So they have put quaternary sectors grouping into consulting, education, and R&D. In stock market, this is, as I said, stock market and economy are two different things. Economy is the purest of the subject, and the applied is the stock market. So we are learning about the stock market course, so probably this information you are not going to use, but since you will be going and doing some secondary research, you will come to know about that. Okay, the categorization of sector happens also on these levels. I have included this. Then as we have seen in previous lecture especially on Indian economy, when we were learning, we saw that we have divided sectors broadly on three more terms actually. One was agriculture, where we saw that primarily we have been into agriculture from a very, very long time, right? In India, if you see from 1947 to 1991, majority of the population was dependent on agriculture sector, right? So that is also called a sector, though in stock market you will hardly see any significance of agriculture sector, because till now agriculture or the milk production, these all things are still done in a very unorganized sectors, and they work in a different territory altogether. So they have been not included in the stock market because you hardly find companies into these sectors also. Something which is which came into picture, or when the industrial revolution happened in every country, industry came after agriculture, and industry is one of the major component which contribute a lot to their GDP. But in India, you don't have the similar case. Here in India, it's the services which contribute maximum to the GDP. Something interesting which you need to see here is the agriculture, which contributes 14% in the GDP, it employs almost half of the population of the country. Industry, 27% contribution in the GDP, and it employs 22% of the total workforce. In services, it employs 27% of the total workforce, but it gives 59% contribution into the GDP. Now, as I said, agriculture is hardly having any direct involvement in the stock market. But yes, stock market companies will be divided into industry and services sector. And since you can see that 59% of the contribution is coming from the GDP, every time you go and see the market indices, what represent the market? Nifty, Sensex, they represent the market. What is the base index? Nifty and Sensex. So there you will see that companies which are operating into services sector, their weightage is high, right? So before we jump to that, let's just count down all the different sectors or industries which are there in our country. So agriculture, as I said, animal husbandry, so people who keep animal, and then export and the the daily consumption in form of meat and other leather produce is the part of this animal husbandry thing. Fishing again for the food purpose, natural resources, coal mines and other natural resources which you take out. Then defense sector, energy sector is there, oil, gas, all those things comes from the energy sector. Engineering sector, you may define that engineering is used into automobile. It is also used into all the heavy equipments, machineries and all those stuff. Gems and jewelry, I mean you must be having a watch, so even watch manufacturing of watch from Titan, that comes into gems and jewelry industry or the sector. Infrastructure is there, petroleum products and chemical. So most of the chemicals base substance is petrochemical, and that's why they go hand in hand, and petroleum product and chemicals are always put together into one sector. Then you need pharmacy. You see a lot of companies into pharmaceutical sectors also. Textile is the clothing sectors. So I'm sure you know them, but I'm just revising these pulp and paper. Aviation means you had Kingfisher Airlines into aviation sector. Right now you have Vistara from Tata, then you have Indigo, you have a SpiceJet, you had Jet. You must have heard about the issues in Jet. Banking and financial services, financial technology is one of the very latest sector. Information technology, this is one sector which never existed till 1990 probably in India, or even if it existed at a very minute scale, but then it became one of the leading job provider for the educated Indians, especially engineers. Information technology is one of the sector. Then you have insurance, then you have retail is like everything. Retail could be into fashion also. When you go and buy clothing, that will be called clothing retail. If you go and buy your daily consumable products from one of the big bazaar will be called one of the retail shop. Tourism is one of the sector. Media and entertainment, PVR is one of the company into media and entertainment. G can come into media and entertainment. Healthcare is there, hospitals, logistics. So Gati is one of the company which is into logistic. Printing industry is there. Telecommunication, you must have heard about Idea, Vodafone. Geo is the new web, so telecom industry is there. Mining, Vedanta is there. Then iron and steel, Tata Steel, and so iron and steel go together. Then you have construction companies. So these are the different, so many sectors are there, 20-25 sectors are there. And if we talk about the stock market active sectors, then almost all sectors companies are there which I just spoken, but except agriculture. But if we talk about market, as I said, Indian economy is represented by service sector by and large. So if I talk about Nifty or Sensex, you will see that Nifty is representing 13 sectors with different weightage. Okay, and if I have to show you the weightage which I have taken from Nifty, 39.47 to the financial services sector. So financial services means banking. Banking comes into the service sector, right? So you see that 59% of the contribution is coming from the coming from the services sector, and this is one of the service sector which got 39.47 weightage into the Nifty, right? So if you remember where I have explained you about whether economy and stock market go hand in hand or not, that can be seen from these kind of weightage also, that they will go hand in hand most of the time, except some time when you will see that there is some deviation out of in their, they are not having very highly correlated the performance of the economy and the stock market. Then energy sector is having 15.31. 13% is into IT sector. Again, IT sector belong from the service sector only, it don't belong from the manufacturing sector. Then consumer goods, 12.38 sectors. Consumer goods will not come into the services but into manufacturing. Then 6.11 to automobile. Automobile will be again come into the manufacturing side, industry side only. Rest 13% for all other 8 sectors. So Nifty 50, which I again want to show you. So if you see all these companies in Nifty 50, you will see that they belong from 13 different sectors, right? And out of those 13 different sectors, something which you saw here is these are these 5: financial services, energy sector, IT sector, consumer goods, and automobile. These are those sector which have the maximum weightage, almost 87% together. The rest 13% comes from 8 different sectors. So now you are, now it is something which is very much visible to you that financial services sector is something which you must know in detail. Energy sector is something which you must know in detail. The complications of IT sector or how to analyze a IT sector company is something which you must need to know, because they are the contributors. These are the companies which are there and they are going to exist as well. Well, this is something where you take a safe approach, but idea here is you need to know about all the sectors. Maybe some of the sectors are not present right now, okay, in stock market, but obviously the businesses are getting done. Listed or unlisted companies are working there. They might not be part of Nifty 50. They might not be part of the sectorial indices or Nifty top 100 companies or Sensex 200 top companies, but that might be the future. Idea is always to also the idea is also to find which sector may do well in coming future. Okay, there are sectors which are present, which are doing well, but if you really, so there are two approach. One is the very safe approach where you go and go as per the market. So when you see that in the economy, in the GDP, banking and financial services sectors are having maximum contribution, you may also think about having your own portfolio dedicated 25% to banking and financial services, right? There could be many reasons behind it. One, you may find more companies who are stable there. Then you may also see that you want to hedge the market risk by using future instruments, and at that point of time having a correlation is very important. Yes, identifying 6 to 7 sector is something which is important out of the 14 sectors of Nifty, right? And within those sectors it is also important to find out which is the best company out of it, and for which you need to know the industry analysis. Well, the very next chapter is about how to do industry analysis and what are the key concept of every specific industry. Not every specific, I'll be covering the very top 5 which I have shown you on the previous slide. But yes, in this video, what you learned about that, what are the different type of industries, different type of sectors, what is the difference between industry and sectors, right? And why it is important to understand different sectors or the sectorial analysis. But something which we always have to remember, there is no fixed approach to anything, right? But there are few very basic things which you have to also always follow, and one of the thing is like you have to have a portfolio of 6-7 sectors, right? It is very important that you include companies from different sectors, right? And that's why we are covering this sectors in before starting our fundamental analysis module, so that you become familiar with it. You can also go and explore NSE website when you are taking this lecture. This PPT will be included also in the course itself. I'll attach the PPT which you can download and refer, and also do your own analysis on different sectors of Indian economy. Well, thank you.